Bosh, what's happening guys? Long overdue video. I'm just going to do a quick video analysis of how to do trend lines, how to draw trend lines on the chart, and how to identify support and resistance zones. Just before I put up a video of my approach slash strategy and what I do when preparing my analysis before entering trades, primarily because I see a lot of people um, like copying other people's strategies, looking at other people's strategies and trying to use slash mimic them themselves and just losing money. And the reason being is because not every strategy works and not every strategy works for everybody. Okay, so everybody's got their own little approach, everybody prefers little things here and there, and everybody's emotions are different. Okay, that's why when you're copying trades, it's really hard to get somebody with quite a high consistent win ratio because everybody's emotions is different. Okay, so when I've entered the trade, I could go out on a dog walk, nice and relaxed, have at least an hour off the charts, come back and reanalyze things. Whereas you might enter at the same time as me and then sit there watching the chart, plucking at your nails, pacing up and down the living room, and you'll close like because of that emotional response. Okay, so when you're preparing your analysis to enter a trade, one of the main things that I've learned is just to do like an affirmation, like a process of elimination almost. And I'll go through a lot of different approaches. And if all signs point to Lauderdale, then I will go in that direction. Okay. So let's start with trend zones. Trend lines, sorry, are a great way to see the context in the market and just see the overall trend direction. Okay, and they're also really good to just get those better entries and exits, which I'll go on to a bit later. So now to confirm that you have got a trend zone, you want the minimum of 2 swing points on that trend zone. So say for example here, I'm going to start by drawing the trend zone this time because it's a lot less confusing and it would be handy if we were actually on a trend line. Okay, right. So trend line. So we can see here we've been in a bearish trend since November. So we'll put one there. And now you don't need to be super accurate with this. It doesn't need to be touching the shadow of the wick. It doesn't need to be directly on the candle. As long as you can see that overall the price has genuinely touched that directional area, it's okay. Um, don't overthink the whole process. Okay. So again, nice little bearish trend zone. Not going to be super neat with it, but as I can see, and as I was saying previously, you wanted at least 2 swing touches. When I say swing touches, that's not one touch in the morning and one touch in the evening, and then it spent the rest of the time consolidating and God knows Narnia land. Okay, so like here we can see November, we had 2 touches. And then, I mean, I could class this because if I drag this down a little bit, it's basically a touch, but no, we'll leave it for now. And then here again, 1st of December, come down, touch the bottom of the trend zone. We've had 2 touches here, 20th at end of December. Um, Again, pretty much the day after a big bearish drop, but then it sort of held. Well, it did hold the bottom of the trend zone, touched, retested, come up, come down, half touch, come up, we touched up here, now we're in January, come down and now back up, we've touched again, it's retested and now we're on our way back down. Okay, so we've had 1, 2, 3 touches at the bottom, 4, 5 if you include them, and then top side we've had 1, 2, 3, 4, 5 if you include them. Okay, so I know since November we've been in an overall bear trend. Okay, and then what I was saying previously with better entries and better exits. So now, for example, I can see here that here it touched, it retested, and it come down. Here it touched and it retested. So say, for example, here, say we'll rewind like a day or two, and we were here. Okay, it's just about to touch this trend zone, this trend line. So before I enter, I would be like, right, okay, it's already hit this point 2 or 3 times and it's retested. Okay, so that's quite a high probability of previous history that showed that it could happen again. So I'm going to plan my entry around that price area. So I know to enter around here. And now a lot of people say to draw these trend zones on daily time frames because they are more accurate. Yes, they are more accurate because you've got a lot more touches on that trend zone. So it could have been going on for half a year for all I know. However, if you're not trading like a swing trader, if you're not, when I mean swing trader, that's just holding your trades over a few weeks or a few months. If you're not doing that, there's no point drawing a trend zone out on a daily time frame, because even though the overall trend for the next few months might be bearish, in the meantime, you're going to have loads of pullbacks. The next couple of days could be a complete bull market. We could have a massive bull market, touch the other side of the trend zone and come back down. But if you're just in and out in that day and you're looking at a daily trend zone, you're going to shoot yourself in the foot. So I think it's a very, very personal approach, okay? So like find out how you're going to trade. Have you got work? Are you still working? Are you spending all the time on the charts? How much time have you got to put into this? And then go from there of what type of trader you're going to be and how you're then going to approach things. Okay? Brilliant. Fantastic. So we've got trend lines. Now onto support and resistance zone. Now I'm not going completely into depth about these because I'm still going to touch up on them when I upload a video showing my approach, and hopefully I want you to all do your own due diligence and now be going and looking into trend zones on YouTube or online or wherever, a support and resistance zone, and just taking all this as like a nip in the butt, whatever metaphor you want to use, and then do your own due diligence. Okay, I'm just providing the fundamentals, so I'm not going to spend all of my day going into the ins and outs and the if, buts, and maybes. We don't do if, buts, and maybes around here. Okay, so support and resistance zones. Now, a support and resistance zone is just identifying a key point on that chart where the price has hit, retested, and pivoted. Hence the name support and resistance, because it's hit it, it's acted as support, it's hit it, or it's acted as resistance. Okay, so let me hop onto AUD JPY so we can get a better example. Do, 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 do. Okie dokie. So we can see here that it's dropped down and it's hit that two times, and then I wonder if in the previous. Okay, so it's not really a good example, is it? Okay, right. We can see here. Bosh. There we go. Bam. And then bring that across here. There we go. What's that? 95,764. We'll just call it 96. Okay, we'll be conservative. 96. Okay. We can see in July, 20th of July through to the end of July, it's come up, it's hit it, it's acted as a resistance barrier, it's come down, it's come back up, it's acted as a resistance, it's come down. Okay, and then we can see again. Had a little bit of foreplay with it here in August, September. It broke through, it retested, acted as resistance. And then when we did break through, we had a close above the resistance barrier, and then it's gone up over. Okay. And then again, when we've come back down, it's hit it, it's retested, come back up, it's broke through. We've had a candle close outside, and then it's come down. Okay, into a new one. See if we can get a new one there. Bosh. There we go. And there's the support level. One touch here, another little touch here. It's come down half a touch there. And again, so we're just really identifying where the price has gone up. It's touched. It's basically acted as a key pivot point. Now, even though these are key price sort of pivot points, they're also psychological pivot points, because as myself and you guys now are seeing, everybody can see these little psychological support and resistance zones. Sorry, I'm just trying to focus on getting. There we go, we've got a couple of touches there. So everybody can see these support and resistance zones, and that literally just adds to the evidence and like backs them up, because then if you've got hundreds of thousands of people trading all day, every day, and they can all see the support and resistance zone, and everybody's thinking, right, at 96, it's going to hit there and retest. There's going to be a lot more people that are going to be pulling out of the trades there. There's going to be a lot more people that are jumping in sells there. Okay, so it just literally adds to the evident, like, confluence, sorry, of the support and resistance loans, support and resistance zones being even more, what's the word I'm looking for? They're even more, um, like, evidential, like it happens more, like it's more certain that it's going to hit that point and reverse, if you get what I mean. And again, that's just adding like another process of elimination on. So you can see for here, we were on an hour time frame. We've identified a couple of little support and resistance points on the smaller time frame. Now we're on the bigger time frame. We can have a look again and see that you know what I mean, on the wider perspective, there's more to look at. So as you can see on the daily time frame, we've got a lot more support and resistance zones. Not only that, we can see that existing ones extend out. So we have this one, there's more touches there, but if we bring it across, that sort of general area acts as a support and resistance. You can see we've got a touch here. There's a lot of consolidation around here, breakout here, comes over a lot of little touches here, again here, and obviously we've got the most recent ones here. Again, another one extends out here, we've got touches here, to the bottom, and it's just about literally identifying where these little pivot points are. So it adds on, what am I looking for here, clone? There we go. So it adds on to just sort of that process of elimination, like I was saying. So you know, if you've done your trend zone, which is here, you've set out your pivot points, your support and resistance zones. So if you've come to the top of your trend zone, you're in a sell, you're coming to the bottom, but you're also then coming to a support zone. You know, then it's more likely that it's going to touch that and retest and come off. And that's what it is. It's that likeliness of just increasing it, because like you're never going to be 100% certain. It could be a news release and it could just go volatile and things could go sideways. So it's literally just about identifying those areas to help with your trading, get better entries, get better exits, and just help with that risk management. You see, there's quite you could go all day, honestly, just getting little pivot points here and there. I'm sure there's a lot more than that, but like I said, I'm not going to go too much in depth. I'll leave that for further educational videos that you find online. Just basically covering the fundamentals here before I show you the altogether approach in the final video. Okay. Right, so I will leave that there. So we've gone over the trend lines and the support and resistance lines. I know I've only gone over them briefly. Like I said, I will go into them in depth in the next videos I'll upload. Sorry, the final video that I upload. I'm going to upload another video just touching on a few candlestick patterns here and there in news releases, and then in the final, and how to use the stochastic indicator and relative strength indicator along with moving averages. Like I said, it's not just one indicator, it's a whole bunch, okay? And then in the final video, we're going to analyze the quarters theory, which is sort of the backdrop fundamental of the approach, which uses relative strength index, stochastic, moving averages, the whole shabam to identify these respective levels to gain that little winning edge. Again, it's up to your own selves to do your own due diligence. I'm not a financial advisor, so anything I am saying and showing you today is merely for practice and educational purposes, okay? So please take it with a pinch of salt and make sure to do your own due diligence. Sorry, my dog's just currently lying across my laptop and seeking attention. So that will be that video there. I'll make sure to upload the next videos over the next few days. Apologies for the delay. We all have our own battles, but I'm here now, okay? To the saviour.